Now, before I start off this video, I want to say a huge shout out to my guy Abdullah Rashid. He's a YouTuber who goes over different fundamentals and news catalysts, and is where I got the idea from this video from. So, what is fundamental analysis? Fundamental analysis is essentially looking at news to evaluate a stock or currency's value. So basically, we're looking at news events and different news factors and headlines inside of the markets that are not directly inside of the charts before looking at a currency or a stock. Now, if you go on YouTube, you might see fundamentals versus technical analysis. People are always arguing which one is better. In truth, they can be really powerful when used combined. Fundamentals tell you why a move has happened, while technicals tell you the how. So sometimes you might see a big push inside of the market, and you just think, oh, the market's moving this way only because maybe they're big participants or took out this level. While many times the reason why a move happens is due to fundamentals. Here's an example. This is a trade that I took last week. So if you look at the trade, you would think that price just came to my supply zone, rejected, and then fell all the way down. But the reason behind why price even came down and hit my TP was due to fundamentals. We had red folder news happening while I was inside of this trade. And the probability of this trade actually hitting TP and going this far would not have been there without fundamentals. Fundamentals help by not making you get chopped up inside of the market. So my personal journey with fundamentals, if you guys could see this other example, this was a couple months ago. I was inside of a trade and price started going inside of my favor, but out of nowhere, huge sellers came into the market and pushed the price down. So if you were just looking at this setup right here, this chart, you would think that, oh, maybe participants or sellers came into the market and it just hit your TP hit your stop loss out of nowhere. But if you knew the fundamentals, you would have known, I would have known that news came out this day that was exactly the opposite of my position. So for me, fundamentals, when I was first coming into the market, I heard everybody say that they were bad or you shouldn't be looking at them. And even prop firms would say, don't trade the news, which made me have this negative view. So when things like this would happen, I would just be clueless. News is important because of its edge. See, if we go back to my last slide, if I would have known that news was coming out, I would have more edge than somebody who didn't. And that's what really matters inside of trading. It doesn't matter what your win rate, your hit rate, everything else doesn't matter if you don't have edge, because edge is what gives us the advantage to even make money from the markets. Even if you're not even trading fundamentals, you could be trading just purely technicals. If you don't have an edge, then it doesn't matter. And that's where fundamentals and news gives the advantage, because once you know more, automatically it gives you a better edge than another person. Now, let's do a brief overview of the different news events that happen each week inside of the markets. First, we're going over high impact news. We have CPI, NFP, and FOMC. Now, I'm not going to explain what each event is because that would be too much information overload on your brain, but I will explain what high impact news does inside of the markets. So when you see a high impact event like CPI, NFP, or FOMC, you're going to see a huge spike in price in a certain direction most of the time. This huge spike represents the amount of liquidity and money being poured into the market based off of what the news came out as. If you see a lot of prop firms don't allow you to trade these events just because most of the time they won't even get you in at the right spread because the spike happens so fast. A lot of beginners, including me, will try and trade these events and blow up their accounts because price will move quickly in a certain direction and wick out your stop loss, and it will even wick you out so fast that the providers don't even get you out at the right price. So high impact news is the news that is most volatile. It moves the most. Next, we have our mid-tier news. This can be like FOMC members speaking. We have like building permits, and we have secretary speeches. This news is right below high impact news. This news doesn't really do, I'd say, this news doesn't really do much inside of the markets. And most of the time, I don't even notice when this news comes out. Most of the time, this news isn't really followed with much volume, except sometimes when FOMC members are speaking. Then lastly, we have our low tier news. This can be other members speaking that don't really have much of a, I wouldn't want to say presence, but they don't really move the markets as much. We have trade balances and we have business inventories. This is like more of like a yellow folder news that when this news comes out, nothing really happens inside of the market. This news also is more frequent. The thing about red folder news, it might happen a couple times a week. Orange folder happens a little bit more, but yellow folder happens almost every day. And yellow folder being low tier news happens every single day almost inside of the markets. For the majority of this course and this series, we will be focusing mainly on high impact news because they offer the most volatility to the markets. So, like I was explaining earlier, we like to trade around news because more participants are inside of the market. So, a lot of currency traders will get chopped up on days because there's no volume or direction in a certain way. This is due mostly because there's indecision because of fundamental and economic factors. But when we know there's going to be red folder news on that day, we can kind of trade around it and catch the wave of price on that day. Same thing goes for indices as well. Like when you're getting chopped up by NASDAQ or US 30, most of the time you're relying on technical factors only and not getting in when there's huge pushes in price due to other like fundamental factors. So let's go over a summary of the main points we learned in this first lesson. Fundamentals mainly tell the why behind a move happening. So fundamentals tell the why. They don't tell you when to get in. They tell you why a move is happening. Technicals tell you when to get into the market. News is important because of its edge. The most important fact about fundamentals is the edge that it gives you over another person inside the markets. Trading is really about how much you know and how specific you can be inside of your move. The more you know about a move, the more information you can gather, you can make a clear inference with almost certainty sometimes that a news will go, an event or a trade will go inside of your favor. Lastly, there are different types of news events, including high, mid, and low impact. There are different types of news events that affect the market, and high impact news is the main one we will be focusing on. High impact has the most effect on the markets and can be seen by big pushes inside of candlesticks. So, action step for today. Go on Forex Factory and look at the different types of news events. This will help you start to see how news might have affected your trades this week. It can help you to see what events actually happen in the markets. So if you guys like this video, I have Secret Traders University down in the description. It will offer more information on topics such as fundamentals and technical analysis.